Hey everyone, Tom here. Today we'll be talking about the latest stock market news as well as our technical analysis levels for the S&P 500. But one of the other things I wanted to discuss with everybody is the current rotation out of the tech stocks and into the other sectors. What are the charts actually showing us about this? And more importantly, are there any insider transactions that are worth noting? Stay tuned. So the best way to start today's video is just to discuss what we talked about yesterday in the wrap, and that was that Microsoft, Apple, Google, Facebook, and Amazon underperformed last week, along with many other notable tech companies. Now, does this mean that they're not good companies to own? It certainly doesn't. They are excellent companies to own, but they're very heavily valued right now. And I believe that it's really just a classic case of an overextension in terms of the last phase of the kind of bull cycle, at least for now, and a distribution back into some kind of sideways ahead of earnings. Wall Street and other pros are of course concerned about whether these companies can really meet these expectations. And it's easy to see when you have a look at what those expectations need to be for the companies to actually show their share price is accurate. We saw last week that Netflix did not meet the expectation, and this really triggered all these events. But the big thing is as well, we also have a lot of negative insider transactions, negative 5.34% on Netflix. But when I was looking at all of the stocks, one of the ones that was very notable was Nvidia, negative 23% transaction. And if we scroll down, there's a few people making these transactions. Notable, obviously, the president and CEO sold around $38 million worth of shares. Very nice payday for this person. Do they usually do this? They certainly do, but there's a little bit more activity on stocks like Nvidia, and it could be showing that now that they've overtaken Intel in terms of how much they're worth, potentially a little overvalued and a little bit cooked in the market. From a technical analysis perspective, it's easy to see why some people believe this. Very big runs up each year, followed by big steep crashes. Nvidia's been one of those stocks that trades a little bit like Tesla, where it goes to something like $300 and it sells off during the crisis to $181, so it's a pretty big decline. Then has a very steep curve with one of our favorite moving averages being reached each time, the 20. Notice how well this 20 exponential moving average holds this stock. And ahead of earnings, we're seeing it come back down to these levels. And this is something that we'll talk about today when we look at some technical levels on all of these stocks. But first, I just wanted to discuss two things that I missed in yesterday's video. One was the VIX, and people wanted to know my thoughts on the VIX and what was going on right now. Well, the VIX, or the volatility index, obviously shows us how scared the market is about the current conditions. And right now, the VIX has been steadily dropping, and it's on an incredibly key kind of support level here from a technical perspective. When the VIX is under 20, it usually means it's kind of back to normal or back to the normal kind of trading range. And right now, it has been above 20 for the entire crisis, which means there's a lot of volatility still in the market. We're hugging that green line here, which is the 200 simple moving average on the daily. And ahead of earnings, basically, if we see more misses than, of course, beats, expect the volatility to rise sharply. If it doesn't, notice how the VIX is at this support at the same point in time that the S&P 500 is at that resistance, that 3230 level. Remember, I always talk about how all these instruments generally sync together, and the VIX is certainly showing us that. So I want to talk about Microsoft, and I also want to talk about Amazon and the technicals that we're seeing there, is I think that they're still the leaders in terms of showing us sentiment change in the markets. And right now we have Microsoft, of course, doing its earnings this week. If you don't have a calendar like this and you're trading the markets or investing in the markets, I highly suggest you get one. Earnings Whispers is awesome. I think this is one of the best in the industry. I always like it because it has nice pictures, and of course you can see what's going on. On Wednesday, we have Tesla, Microsoft, Chipotle, and a bunch of other companies. I think this is the most exciting day of the week in terms of earnings, and they're all after close, which makes it even more exciting in the futures markets. On top of that, we have Intel, Twitter, all these ones we mentioned yesterday, Snap, and of course, Coca-Cola, IBM, and Logitech. All of these companies are doing announcements, and depending on how the sentiment is for these stocks this week, I think we'll have a massive cursor on whether we crack that 3230 on the S&P 500 or whether we stay lower and we start to sell off. So really today is a big earnings day, but tomorrow, Wednesday, Thursday into Friday are going to be even bigger. So what's happening on Microsoft shares right now? Well, Microsoft has also been hugging that 20 during these steep, aggressive runs like we even saw over here. So I want to talk with everybody about this Microsoft share and the technicals that we're seeing here. Well, one of the things I always like to note is how is it holding something like the 20 moving average? So on the left over here, we saw the 20 moving average on the daily hold the stock on the bull run up. The good thing about that is it's happened again. Look how the 20 has been holding this level and where we are now. So we're actually sitting just around that 20 moving average and things are starting to flatten out. It doesn't have that aggressive nature that it did only a few weeks, if not months ago. So Microsoft has an incredible valuation on it at the moment. Is it founded? We're not sure. We don't know what the earnings is going to be, but the market always gravitates to one of these key areas where it's either a key support or a key resistance ahead of earnings. Obviously, Wall Street is a little bit concerned about the current valuation of the share and they're rotating out of it and waiting to hear more and to find out more. So previous resistance is acting as support here. And we have a few key levels that if it misses, it might find support for potential buyers. One of those is, I think, around where this 50 moving average is going to be. So it'll get below this 202, let's say, come down, test the 50 moving average, which did act as even support during the crisis, and it will probably find some form of buying pressure here. If it gets under that zone, the even stronger buying pressure is, of course, previous crisis highs, but that 187, 188, where previous resistance will act as support, being a very strong role reversal. And I like this level a lot if it was to reach down there. And it's not even that far away, but it does make sense that this would be a very tradable level as well. So everything comes down to earnings, and that's why stocks generally gravitate to these levels. If we look at things like Amazon, it's also the same thing. Now, Amazon, I believe, reports on July 30th, I think, and it's also hugging that 20. It's come down over a very high overextension up to the 3,300 level, and then it's come all the way back down to 29.19. And this is again just because these shares are highly valued right now, and are they going to be able to meet their expectations? So the thing with Amazon is it doesn't always meet the expectations. It has quite a lot of consistently inconsistent. I think that's the best wording for it actually when it comes to Amazon's earnings. They don't often kind of meet exactly the expectation, and we do know that they have a huge amount of costs due to this crisis. Is their business doing well? Of course it is. Will it do well over the long term? Sure. But it needs to maintain this incredible rise during the crisis. And we can see it here to put it in perspective how real this rise has been, especially since 2018 onwards. Jeff Bezos has become amazingly rich. He's the richest man in the world easily. And if he didn't divorce, he would have been worth $250 billion. He would be the first person on earth ever to be worth that much money. So it shows that Amazon is really, really kind of pushing the boundaries of what a share could be doing. And when we look at the technicals, if it gets through this kind of 20 zone, look, it might sell off quite aggressively, at least to the 50 moving average, and possibly even back down to this 2,500 level where it finds previous resistance will be support. So there's a lot of things on the cards here in terms of this extended market on these stocks. And that's why Wall Street and insiders and other people are moving out of it. And they're saying, look, great profits. Let's get out of here and get into the other sector. So what about our thoughts for, of course, the S&P 500, what I'm sure many people want to know? Well, the futures are trading pretty much flat. We're down 0.2% ahead of market open, and that's because this week it's all about those earnings reports and what's happening to those companies. So I guess we maintain really that we've got pretty strong kind of role reversal on the smaller timeframes at the 3181. So we'll draw that up now, where we have previous resistance that could act as support. And then underneath those zones, what's going to happen? Well, on the futures market, I still maintain that it's always better to trade, of course, the real market. We're looking at 3150 still being the key level underneath that. If it comes down to this 3150 again as well, remember, let's say we get through here, we bounce up and we come back down. What's going to be there? A 4-hour, 200 simple moving average acting as dynamic support at the point of where resistance has become support multiple times. We always talk on this channel about how there's key areas. So we've got the key area up here at 32.30. If it breaks that, then we can look for roll reversal, taking it long. If it comes down here, we could look for scalp levels back up. And of course, if it gets down to this level, again, scalp levels back up or day trades back up. And underneath this level really exposes all the way down here, exposes that 3,000. So there's a lot of key levels happening on the US 500 or the S&P 500 right now. And it's up to you to really look at the smaller time frames if you want to take these positions. Generally speaking, the stock markets are always geared towards the upside. So of course, I always say because of the Fed and because of other things, it's hard to short against these markets. But these are the key levels, I believe. And I think these are the zones that we're targeting this week and just what we'll be covering on the channel a little bit more. I also want to just reiterate one other thing that we see all the time, and that is that yes, there will be a huge amount of divergence on tons of indicators at these peaks. I wouldn't necessarily listen to divergence at the top of this channel. I would be more looking towards hits and misses in terms of the stocks. So how many stocks are beating expectations and how many stocks are not beating expectations. And I know that sounds like a weird indicator for a technical analyst, but the reason I'm saying that is because if there's a huge amount of beats coming in and it starts pressuring that upside, the problem is that could continue and then that will push it through this level. And divergence alone is not going to be a good enough reason to sell it off. We want to see price action getting below these points and then triggering off the sell. We don't need to be up here, even though it's nice. Where we want to be is the smarter areas, the smarter 3150s underneath the close. Wait for it to get under this 200, wait for that confirmation, and then begin the sell-off. So I just caution everybody this week. I think it's going to be a tough week in terms of trading from the perspective of not being news related. There's going to be news, and these earnings reports are going to move this market. So it might be a bit of a slow Monday, and then we might start to see a big tick up on Tuesday. And of course, Wednesday will be a super episode to be watching. So make sure you subscribe and of course, hit that like button and comment down below with which bit of news you're looking most for in terms of companies. Which one are you waiting for to show you the sentiment of the market right now? Happy trading, everybody. Good luck today, and we'll see you in the next video. Bye.